Hello friends and welcome back to the channel. Welcome back to the SPY series, day 8, where we go over how you can trade the SPY every day for profit using the 30-minute chart. So I decided to make this video about 2 weeks back because 2 weeks ago I noticed over a week's time that SPY was having some really great setups on the 30-minute chart. And so I want to give you guys that information as well. So we've been doing this series. We're going to trade SPY for the rest of September. We're going to see how it goes and see where you guys could have got in, where you could have got out, and how to manage that trade, where to put your stop losses. So I'm glad you guys are here. I love making these videos for you guys. It's a lot of fun for me. So let's get started on this SPY 30-minute video. And I want to tell you guys, with every trade, every strategy, there is risk involved, always. There's always risk. Doesn't matter. If someone tells you there's no risk in a trade, they're lying to you. Because every setup, every trade has an element of risk. And that's because we as retail traders, we don't know what the next candlestick's going to do. We trade based on probabilities. And yes, we can have very high probabilities of something working and something playing out, but that doesn't mean that it's going to happen that way. And that's where the element of risk comes in, and you guys have to determine how much risk you're willing to accept. And that's the part where we decide where we put our stop losses to make sure we minimize that risk and maintain our capital in a trade. So let's look at this first 30-minute bar of the day. This is the first 30-minute candle. Now, if this candle would have opened up here and trended down past the bottom of the last candle, then this is a trade that I would have taken. But because we gapped down, now for visual, I always put this blue line in for you guys to see. So this blue line represents where the daily chart would be green above that line or red below that line. So we're looking for breaks of bars within the range, either below this blue line or above the blue line. And when we take the trade, we need to make sure that the hourly and the daily is in the same direction. That's the criteria that I want to look for. And it's virtually a hashtag 30 and 30 kind of what we're looking at, but not all the time. Sometimes it's continuations. But I want that hourly and that daily to be in the same direction. So this blue line will give us the flip on the day. Okay, and then if we have the week, the month, the quarterly, and the yearly in that same direction as well, well, that just gives us a higher probability that that trade is going to work out. And is it possible that it doesn't? It definitely is. The probability of it not is just less than normal. But there is still that element of risk. So this is the first 30-minute bar. We opened, we came back up, we filled that gap, and then we trended back down. So we are looking for a trigger of this bottom of this wick, and that's what that yellow line represents. So if we go to the next candle, we come back up, and then we break back through. And I think I talked about this in day 7 or episode 7 of this. This is episode 8. And I even talk about it in the daily watch list videos. So this target is marked out, and it's marked out simply by going back and finding the next lowest preceding wick. And we have to go far back. And here it is on, looks like July 22nd. And if I zoom in there for you guys, you'll be able to see that I've just placed it at the bottom of the wick right here. Okay? So now if we go back to our setup, the thing I was saying, and I talk about this, like I said, in a lot of videos in the watch list, if we don't have a lot of meat on that first target, I'm very cautious, okay? Because a lot of times what happens, and we had the exact thing happen on this setup. Okay, we triggered, we hit targets, and we blew right back up past and in the opposite direction. So I'm just going to find my stop loss line. There it is. I'm going to bring this down, and I'm going to zoom back in for you guys. So once we get into this trade, we triggered at that yellow line. Okay, we are in the trade. We're good to go. We've got time frame continuity on our side. It looks awesome. And remember, I talked about risk and probability. The probabilities of this trade working out should have been really, really good. But probability does not make a trade true. There is no meat on this setup, okay? There's a trigger and there's a target. 374.38. It's a 6-cent difference. We tagged it and then we broke right back up through. So there's a couple places you can put your stop loss. You can say, well, I hit my target. I can put my stop loss at that target. And if it continues to go through and comes back up, I left with profit. You can put it at that trigger and you can break even. I wouldn't put it at the trigger. I would put it at that target. Or you can put it at the 50% mark of the first bar, that opening bar. So that's 375.87 to 374. That's a really, really big range on SPY. You're going to lose a lot of your capital if that's where your 50% mark, if that's where your stop loss is. So if it's me, I'm putting it at that target or at this trigger, and I'm leaving with something, or I'm leaving with, you know, the commissions and the fees that I paid to get into the trade. That's how I would have played that first bar. But we can say for today we're 0-1. Okay, fair enough. We're 0 for 1. Now you're saying, well, it came back down. It came back down. That's great. It did come back down. So get back in the trade then if it comes back down. Now, if you held through that, congratulations. You got some balls of steel, I guess. I wouldn't have held through that. So now we came back through that range. Okay? So again, where do you put your stop loss? Because we didn't hit a trigger yet. Okay, so you're either at that trigger as your stop loss or 50% of the previous bar. So again, you're looking at a dollar move. Okay, 374.28 to 375.29. That's a lot to risk. Okay, if you want to risk a little less, you can put it at the bottom of the body. Okay, that's a little bit less to risk, or anywhere in this range. Okay, let's say you pick a happy spot in between the wick and the body. Okay, you got to determine the risk, essentially, and where you think you want to take the stop at. So if you're like, no, I want zero risk, I'm going to break even and pay my commissions and fees. Okay, so we go to the next candle, and there you have it. So we break up through that range. We come down, and we didn't hit a target, and then we reverse back up. So again, I'm not going to be upset with you guys if you take profit in this range. Like, go right ahead. It's over a dollar move. So if you feel like, I'm not comfortable with it, I want to take profit, that's fine. Take your profit. Now this green line represents a target separate from what we're looking at. So I'm just going to move that over. So we didn't hit a target. So what's the next candle? Because we reversed. We reversed back up through. You're out of this trade. Now what happens? So realistically now, guys, you're, what are you, 0 for 2? Maybe you took some profit. So we'll call it 0 for 2. Okay, then we go to the next one. This has a big jump up. Would you take any of these trades? We break this target. We break this trigger. We come up. Would you take this trade here? Or here? Or would you be looking for a break here? For me, again, I'm not taking those trades because this daily is still red. I need both of these to be in the same direction. Would you have made some money here? Yeah, you would have. But I don't need to take every trade that's set up for me or that's possible. I just don't. That's not the way I do it. So let's go to the next candle and see what happens. Now we've got an inside bar. So what we would be looking for here, guys, is a 2-1-2 reversal. So I'm looking for a candle to come back and break through the bottom side of that inside bar. So the next 30-minute candle, there it is. Okay, so let's move into this now. Trigger. And we hit target 1. Move that up. And we hit target 2. And there's target 3. So again, if you took this trade, you should have had a stop loss here, or at the very, very worst, right here. Okay, so you went 374.62 to 374.09. That is a winning trade, but you need to be able to take your stops and move your stops. And if you need to be able to take profit. If you're thinking, oh man, this was only a 20% play, I really want 60, 70, 80, 90, 100%, then you're going to fail at trading. Because you need to take your profit when the candlesticks tell you to take profit. You do. And that's the only way you're going to win, is if you take those profits. And we live in a society where everybody just wants to win. Win at all costs. Whatever it takes to win, and win big. Because little wins don't do it for me. Those little wins will make you a successful trader. If you can put in the same capital on every trade and make 10% a day, it's 200% a month. You want to do 20% a day, that's 400% a month on your capital. Don't focus on the dollar values, because if you're only putting in $100 on a trade and you're only making 10, it doesn't sound great. 10 on 100 doesn't sound great. 100 on 100 sounds great. 300 on 100 sounds great. But eventually, those $100 trades that you're making are going to turn into $1,000 trades. And it's going to end up being $100, $200, $300. Okay? That's the stuff that we need to build up to get to if you're trading with a small account. If you already have a large account, congratulations, you're doing great. But I'm guessing a majority of you guys have smaller accounts, so don't blow those accounts up. If it's $200 trades or $300 trades, okay, that $30 is $30. Okay, take your profit. $30, $150 a week, it's $600 extra a month for you. Build up your account. There is no get-rich-quick schemes in trading. It's consistent effort, base hits. Okay, I lost my track where I am here, but like I said, at the very least on this trade, you should have been out at even, but realistically, you should have been out on one of these targets. Okay, that should have been your stop loss. We go to the next candle, and we're back up. Okay, would you take this trade here? Would you have taken this trade? Nope, because our daily is red. So what's the next candle? Boom, there you go. Then you can jump right back in again. Now we're 2 for 2. And these trades start looking really, really good for us. The day starts looking good for us. Okay, because now we've broken through this target. We're going to delete this one. I'm going to delete that one. So now we've come through that target. And again, guys, be okay with this. You come through that target and make it your stop loss. Okay, if it comes back up, it comes back up. And again, worst case, you're like, nah, I think it's going to go down. Put your stop loss at the trigger. So you leave at least break even outside of your fees. Okay, what's the next candle? We're sitting at 12 o'clock my time, so that's 2 hours left in the trading day. What's the next candle? Now you have this 2 up that finished green. Okay, what's the next candle? You would have been out. If you would have hoped, you would have been out of this trade. You would have sold somewhere up there for nothing. Okay? So now we're at 12:30. We go to the next candle, and I think it just fast forwarded on me right to the end of the day. Here we go. This looks like live trading right now. So again, let's set this up for you guys while it's live, okay? Is that your trigger? It's not, because the day, I know it's showing green, but we would have been still below the blue line. So your trigger becomes there. That's your trigger, okay? Now, let's go back and let's find your stop loss or your target. There's your first target. There. Look for that target to hit. And put in a stop loss. Let's change that to red. So again, get out of the trade. If you didn't take profits here, then come out of the trade. There's 10 minutes left in the day. What are you risking at 10 minutes? You have all tomorrow to trade, all day Friday to trade. So if you didn't take profits here, you come back through, out of the trade. Maybe it comes back up, maybe it doesn't. Okay, it's trending back up. That's great. You lost nothing except for your fees. That's the worst case scenario, guys. And if you thought, well, no, I want to hold it a little longer, sure. Put it down at the 50% mark of this candle. That's fine too. Okay, there's your 50%. You trigger. If you come back to this point, might be a little higher. If you come back to this point, then you can be out of that trade. Okay, with a loss, and you can be okay with it. And we'll see what happens with this. And maybe it runs up and hits that target in the next 10 minutes. Maybe it doesn't. Who knows? There, it just dropped again. So it's very, very unpredictable. And if you guys have to, you can hop down to the 15 and you can see what's happening on the 15. If you want to hop down to the 5 to see what's happening, you can hop down to the 5 and see where we're at. See how we're trading off of this inside bar. But if we go back to that 30 again, guys, look at how this thing is dropping, okay? Even if you would have put this to 50%, okay, 50% of that candle, you're coming out of it. You're out of this trade, okay? We dropped through there already. So make sure you set your stop losses accordingly. This is the smart play. That's the smart spot to put it. It is. It just is. Okay, that's where you should have had it. And like I said, does this thing come back up? It's very, very well possible, but that's not the way it's looking right now. And if you hop down to the 15, it doesn't look great. Okay, it doesn't look great. Now we're below the daily line already, and we're trending in the opposite direction. Okay, this was a live example of why, that's on the daily, of why you keep your stop losses in the right spots. Minimize your risk. Minimize it. Worst case, you got out with a little bit of profit here if you wanted to sell because you're coming into the end of the day. Or I should say best case, and, you know, put your stop loss here. Just put it there and click it. It's so hard for people to get that through their heads. And I have trouble with it too. But you need to be able to will your mind and your body and every gut instinct that you have to make that your stop. Make it your stop. That's where you should be getting out. Leave with as much capital out of a trade as you can. Okay? And that's all I can say to you guys. I'm not going to stay in here for the last 8 minutes to watch this trade play out. You know where I would have stopped out. I've got it there. Could you have taken profit here? You sure could have. And you would have left with an opportunity. So, again, 1 win I think we had here, 2 wins maybe, and 2 or 3 losses. So, kind of a break-even kind of day, maybe a loss of a day. But we haven't had very many of those. Out of the 8 days that we've gone through this, you should have been green most days. So, that's it, guys. Make sure you're following me on Twitter. Subscribe to the channel. Comment down below with your wins, with your comments, with your concerns, and the Discord. Get in on the Discord. The link is in the description below. And if you want to learn more about this stuff and see more videos, there's a video at the end. Go click on it. It is the original video that we did for this, as well as some learning tools for you guys, okay? Good luck trading, and we'll see you all on the next one. Bye-bye.